Hey, this is Nick with Us versus Herd. What we're going to be going over today is why I believe or think that the stock market is going to be moving higher. And I mean, you may say that sounds a little bit crazy, but I'm gonna explain my point of view here on why I think we could still move higher. And for those of you just tuning in and not sure, where the market was or why we are, some people are getting a bit bearish and it's getting toppy, and some of these things are true. But I'll explain to you kind of where we were and where we are now. Let me get the 1 year chart here. This is SPX. This monitors the S&P 500, as you can see here, and we're currently at 23.99. But let's zoom in here. Let's go back to Brexit and the election up until like November. That'll be better. So we zoom in here a little bit. So back here of last year, this was Brexit, and then up here, this big dip here was the election, and ever since then we've been moving up. So as you can see that we've been, had a few major dips and major selling. I mean, this went from 2104 down to, 2037. So about 60, 70 points here. And then another, overall it dropped about 100 points, all before having a huge rip up. That was Brexit. And, not quite the same effect here. I mean, we dropped, let's see, from this area 2144 down to 2080, so about 60 points, and then now we're at 23.99 since the election. But I'm going to explain to you a couple things here. Yeah, so since the election, for those that don't know, we went from 2084, 2083, somewhere around there, all the way up to the highest up until like about a week ago was 2405, and it's still attempting to make those highs. But for those who are new to trading and not sure kind of what's going on, you kind of got to look at the data and see, kind of what I'm talking about. Now, let me get these returns here. Now, what I did was I pulled up pretty much the yearly return on the S&P 500 for, well, this is from 88 up until now. I mean, we really only care what's happening now. But if you go back in time and kind of see, how the S&P adjusted in a bearish and bullish market, you kind of would understand why that I think that we're possibly going to be seeing some new highs higher than 2405. So what people need to understand, the difference between consolidation and then being, a bearish market. So I mean, there's no doubt about it. Looking at, let's go back here. This is to the yearly. I mean, there's no doubt about it. A year ago, we were at 2053, now at 2400. I mean, that's about a 20% gain about a year from today. I mean, you have to say that it's definitely a bullish market. And as you can see, every dip gets bought. Every dip gets bought. Every dip gets bought. I mean, there's no huge collapse of the system. I mean, if you look 5 years, let's go back to the last 5 years. I mean, even big dips, I mean, still we remain intact. I mean, this was 5 years ago, we're at 1266, and now we're, almost double that. We're at 2400. So I mean, yeah, there's going to be dips. There's going to be huge selling, like here in August of, what was this, 14, August 2014. No, this is August 2015, sorry. August 2015, there was that flash crash or whatever. But eventually, it had a huge rip back up, and then consolidation, and then kind of down, and then went back up. But yeah, volatility is good, but there's a difference between consolidation, flash crashes, and binary events. So as you can see, I mean, if you look at the crash from yesterday on this little chart, or not yesterday, but 4 or 5 days ago, there was a crash, a 2% crash, almost a 2% crash, like 1.8% on S&P. I mean, this doesn't even make a dent in this chart. I mean, you can't even tell unless you really zoom in here, and then you can see, that it actually did something. But I mean, if you if you're day trading, I mean, that's one thing. If you're buy and hold, it doesn't really matter. I mean, if you bought something 5 years ago, I almost guarantee right now, if you choose anything like Amazon or Apple, um, I mean, unless you choose AT&T, which I don't think anyone should ever buy AT&T. I mean, 5 years ago it was trading for $33, and now it's at 38. I mean, congrats, you made $5 in 5 years. So, not great. But if you look at Facebook, 5 years ago, $17, now at $149. You know, any of these tech companies, you will see that you would have made money. I mean, 5 years ago, Amazon's at 200. Now we're at, pressing 1,000. You know, I guess you get the idea. I mean, we've been in a bull markets for a while. But let's look at some of the past data. Let me pull SPX back up here. Let me get some of this data here on a little bit fancier chart. So let's actually only show the last. Let's do 20 years. So this is kind of what I'm looking at, and as you can see, in terms of being bullish or bearish, you can see in the last 20 years, there's definitely more green years than there are red years. So there's, let's see here, out of the last 20 years, there's 2015 was basically flat. This 2011 is basically flat. So I mean, if you count those years, I mean, we have 1, 2, 3, 4, 5, 6 out of 20. So, the buy and hold, if you're a long-term investor, that is, the buy and hold will definitely, win every time, especially if you bought on the down years. I mean, it's kind of scary to think, but it's kind of scary to do, but I mean, you should definitely make most purchases on these down years, because I mean, as you can see, good years are to follow. But more specifically, let's go into this year. So if you don't count the election, or a year ago from today, a lot of these analysts are saying a year ago from today, we're up 20%, or from the election we're up 30%, or whatever the case may be. But if you just go from January 1st to right now, where are we at? May 24th. So we're almost 6 months into the year. We're about 5.5 months into the year here. The S&P is up 6% this year. From January 1st till today, it's up 6%. Now, if we go back to this chart here, 2015, a lot of people were bearish. I mean, the S&P didn't really move at all. We were not even down 1% on the year. But I mean, a lot of people were bearish. So let's pull up the 2015 chart here. Kind of show you why people were kind of crazy. I mean, the flash crash did have something to do with it. I mean, as you can see, I mean, this would be definitely a good day trading chart, because you could definitely see this, since the S&P didn't move that much during this year, you could definitely buy the dip, short the highs, and you'd probably be okay. And this is pretty easy money for premium sellers, and also IV will be high because of all the sharp drops. So I mean, they'll go up and then it'll drop. It'll go up, then it'll drop. It'll go up, and as you can see, I mean, there's 3 green days and then a red day, a green day and then 2 red days. So, and then this was, of course, probably brought the most pain to people. I mean, if it wasn't for the flash crash of August 2015, I mean, I'm guessing most people, I'm guessing that the S&P would have been a green a little bit, because we closed out the end of the year here at 2011, and we were pretty much, hanging in here between, let's see, 2,000 and 2,100, a little bit above. Yeah, so I mean, resistance was about 2,100. It kept falling back under, and then it kept bouncing around the 2,000s here. Even down here, it was bouncing 2,000, and then, obviously 2016 was a different story. So if you take a look at that, 2016, we were up 9%. So if we kind of go back in time here, we'll go back. I mean, this was 2000s after the dot-com crash. I mean, we were up 30%, 26%, 19%, and then we're down 10, down 13, down 23, 2013. So I mean, definitely down in here, buy and hold would definitely have been tough. But if you get to, if you were diligent and you kept trading, I mean, 2003, you're going to make most that back. I mean, this went down 23%. So you made back most of 2002 and 2003, and then it went up another 8, and this went on for we got 5 years in a row. So this definitely outweighed. Plus, you had all the gains from here if you were trading back then. So if you were trading back then and you had all these gains, you didn't lock them in, you were kind of stupid, and you kind of deserved it for this to happen because things got a little bit out of hand. But I mean, if you look here, 3 red years and 5 green years follow. 2008, I mean, was the financial bubble. I mean, one was the worst. I mean, went down almost 40%. But the following year went up 23%, 12%. So that, I mean, in 2 years, it made most of it back. I mean, yeah, obviously this was pretty bad. But since 2008, we really haven't gone anywhere but up. So I mean, if you're looking here, 38%. I mean, 23. So in 2 years you would have made it back. I mean, this was at 2011. Let's see what the better number is at. 2011. Okay, here it's showing we were up 2%. And here that's kind of, it says down 0.73. Well, not a big difference. But I mean, if you bought stock down in 2008, you definitely would probably be rich by now on most stocks. So just to show you, a red year. So a red year we had in 2015. I mean, when I mean by red, I mean barely red. Here it's showing we're up 1%. But if you kind of look at the red years here, 1990, negative 3%, following up 30%, then up another 7%, then up another 10%, then up another 1%. So, and then as you can see, it's since 1990 to 2000, it was just an amazing run. And kind of the same story here from 2008, except we weren't even down that much. This was 37%, which is a lot, but since then we're on a 10-year run here. So I mean, if you take a look at the down years, I mean, let's go to the 30 years. So 30 years, I mean, a down year, 3 green years follow, a down year here in 1994. You got another 4 green years following before the crash. I mean, and we had a down year or a flat year in 2015. And based on the information that we have here, I mean, we should see at least 1 or 2 more green years. I mean, this year's already green, so this is not on the map. I mean, if the bar was right here, it'd be probably right around this area in the 6% range. So, I mean, this could definitely go up to the 10 or 20% range here. Like, look at this flat year, we're up 13%, and then in 2013 went up another, 30% almost, and then in 2014 went up another 11%. So when stocks, when you get a down year or a flat year, I mean, there's definitely consolidation. So I mean, if you look at, people say they ask Warren Buffett, hey, are you worried about the stock market, or are you worried about all your holdings? He's like, no, I'm definitely not. I'm bullish on America in general. And I mean, if you're looking at the biggest crashes and the recoveries, I mean, obviously the crashes are bad, but we have, the recovery outweighs the crash over a long period of time. So, I mean, yeah, you can get short here and you can get it, but let's go to the year to date here. I mean, let's go from January 1st, this is December 31st actually, to today. So as you can see here, January 3rd, we're at 2250, and then we went, we had a pretty incredible run here from the 2200s all the way up to almost actually to 2400, and now it's just kind of been playing this game of sell-off. I mean, most of it has to do with like political news, Trump news, Comey, all that kind of stuff. But the market doesn't seem to care. I mean, so you have to understand what the difference between this was a pretty major sell-off. This was the most major sell-off of the year, based on the Comey events that transpired and are still transpiring. But if you look here, that dip was bought. If you look at this dip, it was bought, and I was kind of looking forward to some nice consolidation here because 2350 was the magnet. Now it looks like 2400's the new the new magnet or where they want the market. So we had some decent consolidation down in here, and then it just kept going up. So I mean, if over the long term, I mean, I feel like we're just kind of getting started here based on the data from previous years. You know, if you look, you know, down year, green, down year in 81, green, a couple down years, and we had a flat year, not really a down year, but a flat year in 2015. So, you know, and now we're already up. So now we're up 2016, we're up 9%. Now we're up a little bit more. So, you know, this definitely could run. That's why some analysts are saying, like, you know, this could definitely go for another year, 2 years, 3 years. So, it's, you know, basically, you know, any huge rips, I mean, you could try to short, but the problem is now that there's no longer resistance up here. Who knows where it's going to be? What I'd like to see is it kind of hang around here in the 2400 mark, which it looks like it has been doing, minus this this political news event. But that was a good buying opportunity for a lot of people. I mean, some people, I mean, a lot of people did sell. I did lose some money on that day, but you know, since then, people have been making money again. Other stocks, I mean, other stocks that you want to short, I mean, there's definitely stocks that you can short. I'm not saying don't short any stocks, but in terms of holding long term, if you're looking to hold like a week, 2 weeks, a month, as you can see, like most months we've been going up. Besides, was this March and then April, we had some nice consolidation months. Now it's just been like really choppy. So hopefully this kind of consolidates here before moving, because what a lot of people don't realize, like a stock needs to consolidate after huge moves. It just needs to kind of figure things out and see what it's actually worth. And you know, some people think that that's a bearish sign, but if you look at the data here that I just kind of showed you, there's nothing bearish about consolidation. You know, over the long term, definitely 5 years. And where's this other chart here? I had another one. Yeah, I mean, if you're looking at the S&P, I mean, yeah, we have this is since inception on the 1928 or 7, yeah, 1927. You know, you could definitely say that America has been doing pretty good. You know, buy the dip has always worked, and will continue to work. I mean, unless one day America, you know, ceases to exist, I wouldn't be too worried about but for 2017, I mean, we're already up a lot. I mean, we could run another 20% from here. You know, based on the data that I was showing you in these charts. I mean, you know, a 30% year is not out of the question. So, I mean, it's just people are thinking because since the election we're up 20%, they're not counting the year. So from, you know, basically because of that, it helped out 2016 a lot. Otherwise, 2016 wouldn't have been, you know, that great of a year. And you know, 2015 we had some struggles. So I definitely think, you know, some consolidation or some red years, you know, we're going to have some green years to follow. If you guys have any questions or you have any different thoughts or anything that you think that I missed in this data, this is just why I believe that it's going to go up. I'm not necessarily saying this is what's going to happen, because obviously, if everybody knew where the market was heading, you know, basically we would all be rich. But if you have anything to add, definitely comment below, like the video, and subscribe.